And I was just thinking, why not we just make a good progress, because this being a newly inducted topic into your new syllabus, and we shall try as much as possible and finish it off in one go. So as we leave some time, it will take more time for us to revise. Okay. See, when we have this discussion, see, I was just referring about probability. So where you have two types, independent and dependent. So independent probabilities on the other day, we have just taken up through Excel. I remember there were about 3 into 2 into 3 combinations we worked. Remember that it was 1801 as the NPV, and some 3000 and dot was 3200 and something was the standard deviation. Remember that that particular thing? See, that was purely a problem involving independent probability. So there was no precondition that the second year occurrence will be dependent on the occurrence of year number one. So similarly, there is no connection between happening of year number one to year number two and from year number two to year number three. There is absolutely, the cash flows are totally independent, and that sort of problems we have already handled, and we have not handled anything on dependent probability. So dependent probability is more to do with decision tree problems only. So you can easily tell that dependent D stands for decision tree. Decision tree problems. So where we are expected to take into consideration various combinations, various possible combination. So you should not misunderstand that all combinations are possible. So under that, certain things are possible, certain things are not possible at all. So now let us just take up that. So our friend was just always reminding me about illustration number 11 and 12. Book back, we will take it up later. So now let us just try out illustration number 11. L and R. I hope that all of you could just watch this. L and R Limited wishes to develop a new virus cleaner software. The cost of the pilot project would be 240,000. Krishna, presently, the chances of the product being successfully launched on a commercial scale are rated at 50%. In case it does succeed, L&R can invest a sum of 20 lakhs to market the product. Such an effort can generate perpetually an annual net cash after tax cash flow of 4 lakhs. And if the launch fails, they can make an investment of a smaller amount of 12 lakhs with the hope of gaining perpetually a sum of 1 lakh. Evaluate the proposal, adopt a decision tree approach, and the discount rate is 10%. Okay. So now we have this cost of the project, and the project is 50% chance that it can be successful, and 60%, 50% is not successful. So always remember that when you are taking up a decision tree, start with a decision box. This is decision box, and the line drawn from the decision box is an activity. Minimum there should be 2 lines. Only then you can regard yourself that you have taken a decision. Correct. The first one you put it out as invest. That means you take up the project. The cost of the project where you invest. And the investment that is into the project may result into success and failure. So, or you can put this way, instead of using the term as invest, you can as well tell take up the project. Take the project, and the result could either be successful or failure. See, after this being an action, these are the events possible. Correct? events can be minimum of 2, it can be any number. Similarly, actions available minimum 2, it can be any number. If the line is drawn from box, it is decision box. If the line is drawn from round, I mean the circle or the node, you call that as events. Okay. So every time we don't have to write that. Just for the sake of your understanding, I have written that. So whenever you have this events that is coming up, like it could either be head or tail, the chances of occurrence you should make note that being the probability, the sum of all the probabilities for that particular node should be 1, 0.5, 0.5. See, having taken up that it is successful, you would get a cash flow that is where at this point of time success would mean once again you take a decision whether to invest or do not invest. Similarly, when it is failure also, you can invest and you can say do not invest. So when you are investing, there is going to be a cash flow. There is only one cash flow that they are talking about. And in this particular case, there is only one. I told at the very initial stage that there could be some minimum two. So, but sometimes what will happen is that at one particular case, they tell that there is only one possibility. So, therefore, it is 100 percentage and it is 4 lakhs perpetual and it is 1 lakh perpetual. And investment in the first case being 20 lakhs and 12 lakhs. 20 lakhs and 12 lakhs. These are all outflows. So, at the very initial stage, it is 2.4 lakhs outflow. Now, this 4 lakhs on perpetual basis when you are getting where the cost of capital is 10 percentage, this is only a future cash flow. What is the present value? Present value is equal to cash flow divided by cost of capital. So it is 4 lakhs divided by 10 percentage. So that is going to be 40 lakhs. In this particular case, the present value is equal to similarly 1 lakh divided by 10 percentage. That is going to be 10 lakhs. Correct. The present value is going to be 40 lakhs. So here it is 100 percentage. So it is 40 lakhs. Though I have written here as 4 lakhs perpetual, but I got to consider this as 40 lakhs. I will consider this as 10 lakhs. Now what I have to do is that I got to roll back. What do you mean by roll back? Say when I have drawn it from left to right, I got to do the same from right to left also. So 40 lakhs, I will roll it back. So this 40 lakhs will come to this particular stage. And from here to here, it should go. So in that process, 40 lakhs of income against which this 20 lakhs I will adjust. So there I will be getting a figure of 20 lakhs. So here it is 40 minus 20 lakhs, it is 20 lakhs and do not invest is going to be nil. Which one is better? Now this is decision box number 1, 2 and 3. I'm just doing it in the reverse. Come on, which one is better? Getting 20 lakhs would be better. At decision box number 1. Decision box number 1. So you have inflow and you have outflow. You have outflow, net inflow. This is for invest. Correct. When you have do not invest and select which one you are selecting. So you have an inflow of 40 lakhs, outflow of 20 lakhs, net is 20 lakhs, do not invest is nil. So you got to bring about a comparison between the two. Which one you would be selecting? Better of the two you will be selecting. You put here 20 lakhs. But just to differentiate between the two, I am putting it out in the inverted triangle mode besides the decision box. That means I've selected investing. Similarly, when I have to do that exercise, this is going to be decision box number 2. I have 10 lakhs here, 12 lakhs here, 2 lakhs negative. And people normally used to say this way, no, sometimes there is something is better than nothing. Wrong. Something in the negative is worse than nothing. So it is not something is better than nothing. So nothing is better than something is also possible where such something is going to be in the negative. So keeping quiet at home will have no income, no expenditure. If a person is going out, he is going to bring problems for you and he will fight with others. He will be a drunkard person. He will be sleeping on the road and you will be in search for him. There will always be anxious moments. So it is better that person is keep quiet at home. So likewise, in this particular case, it is going to be nil. So here I will be selecting nil. Correct? That is the reason as why you call that as what? Decision making through decision boxes. So now, what is the next thing that you got to do? So zero point 0.5 into 20 lakhs, zero point 0.5 into nil, it is going to be 10 lakhs. How did you get this? So this you are getting 0 0.5 into 20 lakhs plus 0 0.5 into nil. So that you are getting 10 lakhs. So here this is going to be nil. So decision box number 3, it is going to be 10 lakhs, 2.4 lakhs, 7.6 lakhs, nil, 7.6 lakhs. 7.6 lakhs. Now, which and all you have selected? So you have selected number 1, take the project from 3. Then take the project. Successful means invest. Failure means do not invest. This is the way I got to tell. Are you clear? All of you say yes or no, please. Now you can unmute and then communicate as whether you have understood or not.
Sir, can you just explain a third decision once more?
Third decision. Third decision where you are here. Correct? Are you following?
Yeah, yeah.
And you are here. So third decision, 10 lakhs I have as the inflow. How I am getting is this way. 10 lakhs. 2.4 lakhs I have already spent. Correct. So my net is going to be 7.6. Agreed. And do not invest, do not take up is going to give me nil figure. Between the two, which one is better? 7.6 lakhs or nil? Which one is better?
7.6 lakhs.
That is what I've selected. So all that I've just put in the inverted ones are picked up from here. So from where I've just picked, so I will say this as A. Where is that I picked bill? That is nil. This is B. What is that I've just done here? C. Correct? Understood?
Understood,
Ramakrishnan,
understood.
are you
Understood, sir.
following?
Understood, sir. Understood, understood.
Right. Which one? So what is that they've just given in the answer? Now let me just check it up. Hey, please just do not worry about how they have just given. Our answer is the best answer. So that's what you got to take it up. Venkatraj, are you clear about this? Are you understanding it?
Yes, sir. Understanding it, sir.
What was your problem? You were just asking about this problem for a very long time. Have you understood?
Yes, sir. Understood, sir. Maths, the decision tree is very important.
Okay. No, decision tree is very important. Have you understood this one? That's the question.
Yes, sir.
So here they have not mentioned it so clearly as it was just done here. So they went on to tell at different decisions point. At decision point number C, the choice is investing. At decision point D, choice is investing 12 lakhs for similar perpetual. There is a negative. Therefore, it would not be prudent to invest. See, why this? Take the project. Successful means invest. Failure means do not invest. Matter over. This is the way you got to take it up. The decision points is what you are taking up. Are you clear? Would you like to solve problems? See, on the other day, I just sent you the material. Did you get that? All of
Yes,
you?
yes, yes.
Did you utilize that capital budgeting material? So if you have used, definitely you would have asked me a lot of questions. So when no questions have come, I should only understand that you have not used it at all. Now I will give you. So on the other day, we have just done this problem. Problem number 16 is what we have done. Problem number 17. Yes. One of you please just read out who and all there. Ramakrishnan, Venkatraj, Rajagopalan, Venkatan, Sivagam Sundari. Who is wanting to take it up? Ramakrishnan, could you just read out this?
Yeah, sure. Just one second.
Yeah, please. Question number 17, it is on the screen. Please read out.
Yeah, a firm has an investment proposal requiring an outlay of rupees 40,000. The investment proposal is expected to have 2 years economic life with no salvage value. In year one, there is a 0.4 probability that cash inflow after tax will be rupees 25,000 and 0.6 probability that cash inflow after tax will be rupees 30,000. The probabilities assigned to the cash inflow after tax for the year two are as follows, and they've provided the table. The firm uses a 10% discount rate for this type of investment. Required construct a decision tree for the proposed investment project. What will be the net present value of the project if worst outcome is realized? What is the probability of occurrence of this NPV? What would be the best and the probability of the occurrence? Will the project be accepted? 10% discount factor for 1 year and 2 years. They've given us the discount
Numbers.
rate. Yeah,
See, one thing you should understand that sometimes they may indicate what technique you are going to use. They have conveyed to you that decision tree should be drawn. If I were to be the paper setter, I would have withdrawn this A. And I will convey what net present value will the project yield if worst outcome is realized, and what is the probability that what is the probability of occurrence of best probable there is what is the probability of occurrence of that, what will be the best and the probability of that occurrence, and will the project be accepted. So A question I would have withdrawn. So here it is a problem that they have indicated that it is a conditional probability. How do you know it is a conditional probability? They mentioned that in year number 1.4 probability that cash inflow will be 25,000. 0.6. The probabilities assigned in cash inflow after tax for year number 2 are as follows. So this year number 2 cash flow of 12, 16 and 22 will be the case only when the first year cash inflow is 25,000. That is the indicator. Then comes you have in the first year when it were to be 30,000, then you will have 20, 25,000 and 30,000 with probability given. So how do we approach this problem? How do we know that it is a problem involving a decision tree? So when it is a conditional probability is always, when it is a conditional information or where the items are dependent would mean it is decision tree problems only. So now I will put the case this way. Invest, do not invest, right? When it is invest, in the first year, it is going to be either how much? 25 and 30,000. 25,000 or 30,000 with 0.4 and 0.6. and there is no decision to be taken. Further cash flows may result in this fashion. Correct. How do we crack this problem? Huh? Which one? PVF. We will do that PVF a little later. So now NPV I will arrive at. How do I arrive at for this NPV? So it is 12,000 into 0.8264 plus 25,000 into 0.9091. I will arrive at. From there, I will be deducting the outflow of 40,000. Correct? Yes or no? So please just confirm as whether your understanding is good. Whether your understanding is good enough, please just confirm that. So 16,000 into 0.8264 plus 25,000 into 0.9091 minus 40,000. Kalyanama? Kalyanama? 22,000 into 0.8264 plus 25,000 into 0.9091 minus 40,000. So you arrive at the NPV. You arrive at the NPV. Okay. So please just do that.
So just having a small doubt.
Yeah.
Shouldn't this NPV be adjusted for the
Kalyanama?
probabilities?
All right. Solung.
Sir, shouldn't
Yes.
the NPV be adjusted for the probabilities?
See, please just, we are in the starting process only.
Okay,
It's
okay,
not that probability I am ignoring. So step by step only we will do that. So it is something like when payasam is getting prepared. So this cardamom and all that will be added at a later point of time. So your mother knows when to take it up. There is a point I wanted to add on to that. So NPV you arrive at. The next one which I want to take it up is joy in probability. So your anxious question will be taken care now. So zero point 0.4 into 0.2 is 0.08. 0.4 into 0.3 is 0.12. 0.4 into 0.5 is 0.2. Likewise, 0.6 into 0.4 is 0.24. 0.6 into 0.5 is 0.30. 0.6 into 0.01, 0.06. The sum of that is going to be 1. So I just have a guest. I will just say hi and then come. So please just do that NPV and pick it up. Then it is going to be expected NPV. And this is going to be the answer. Okay, please just bring that computation and I will be there. So please get me the numbers, please. See, or else through Excel, I'll be in a position to solve just like that. So let me just cross verify that through Excel. That I can just do in no time. So it will be exhibition of mm, mm, yes. So you can just find in Excel, we can do it much faster. So combination, I can put it this way, 2 into 3, 6 combination only is possible. 1, 2. Year number 1, year number 2. In year number 2, I'm sorry, 6 also we do have, no. Year number 1, what are the possibilities? What are the numbers that you are having? 25 and 30. 25,000, 30,000. Year number 2, correct. So here I will be noting down 0.9091, 0.8264. So NPV as how we arrive at. Simple matter only. Into some product, this constant, comma, this minus, how much is that? 40,000. 40,000. So where I want to avoid. Correct. Probability. Probability 1, probability 2. Then join probability. Probability, how much is that? 0.4, is it? Then 0.6. Here, what is the probability? 0.4, and this is 0.2, 0.3, 0.5, then 0.4, 0.5, and 0.1. Am I right? So now let us just bring out product of these two. Sum of that should be 1. Now, expected NPV. Expected NPV is NPV multiplied by joint probability. So we will round it off and we will take it up and we will arrive at 3124 is the expected NPV. So what you just get here, I got it that way. Say under examination conditions, you don't have any other go but to do it like this. So, and I just given you time and 3124 is the final answer. Are you getting it? Venkatraj, Venkat, Shanmuga
Sir,
Sundari, yeah,
doing
Shivagami
it, sir.
Sundari,
Doing it, sir.
doing
Doing
it.
it.
Right, right. there is another way through which you can work out the same problem with much lesser computational burden. What is that we can do? So select page, copy page, paste page. So now what is that I will do here? Just watch. You can avoid big computation as, see, a tough way is what firstly I will tell. Then I will give you the shorter versions. Now you people need to use calculator now. So where you got to take 12,000 into 0.2 plus 16,000 into 0.3 plus 22,000 into 0.5, the whole multiplied by, the whole that should be multiplied by what? PV factor. What PV factor that we have got to take up? What PV? 0.8264 is not correct because I will roll back from year number 2 to year number 1. So therefore, I will multiply only by 0.9091 because with this, I will bring out a value here, and with 25,000, I will add up, multiply with probability, and then multiply once again with 0.9091, and 2 times I will be making. Therefore, I will be achieving 0.8264. Is that okay? Say yes or no? All of you, are you understanding what I'm telling? So I am multiplying this with year number 1 PV factor because I am not taking to year 0, I am taking to year number 1. From year number 2 to year number 1, it is only 1 year distance. It is only 1 year distance that you have. 16,545. Point. See, you round it off. See, you are not a kid. 16,546. Are you understanding? All of you should be just getting that number. Similarly, why don't you try this and get me the number here? Please do that for the second year to year number 1, where it is 20,000 into 0.4 plus 25,000 into 0.5 plus 30,000 into 0.1. The whole multiplied by 0.9091. 21,364. Please confirm this, please. Please confirm. All of you. Ramakrishnan, Venkatraj, Rajagopalan, Venkat, and Shivagama Sundari. Please just confirm this. Sir, I can be able to hear only the audio, just changing from Wi-Fi. See, you need to make those changes, my dear. So you can't be just using the old technologies. So please improve it. Come on. 21,364 plus 30,000 into 0.6. So now this figure as
Sir,
how you
correct
will
only,
be.
sir.
Huh?
Correct, sir. Correct only, sir.
Correct only. So
Yes,
now
sir.
this is, if I consider this as A, this as B. For C, it is going to be 16,546 plus 25,000 into 0.4 into 0.9091 plus 21,364 plus 30,000 into 0.6 into 0.9091. Or else you can do this way. You sum up these two. 21,364 plus 30,000 into 0.6 multiplied by 0.9091. Now you are bringing it from year number 1 to year number 0. Please bring me this number. Come on. Where investing will be costing you 40,000. Come on, come on. $43,125. Now, nil, that is do not invest, will be having nil. If you invest, it is 43. So now D is equal to 43,125 minus 40,000, which is equal to 3,125. 3,125. That's the answer that you would be getting. 3,124, 3,125. No big deal. Are you clear?
Sir, I have one doubt.
Yeah.
So from year 2 to year 1, we are taking 0.9091 as the PV factor. Why are we taking the same PV factor for year 1 to year 0 as well?
Because, see, it is not the same 0.9091. 0.9091, we are taking it up from year number 2 to year number 1. Correct? Understood?
Yes, understood, sir. Understood. Yeah, that I understood.
So now I am taking year number 1 to year number 0, 0.9091. Therefore, this figure of 16,546 and 21,364 suffers PV factor 2 times. Therefore,
Okay,
I
understood,
am
sir.
achieving
Understood.
0.9091 into 0.9091 will give you 0.8264.
Understood, sir. Understood.
Though it brings you some amount of convenience here, this sort of difficult moments you will be facing. That is the reason as why if you choose this method, this will have more clarity, but more working will be there. This will have less working, but chances of going wrong is also there. Whichever method you feel like, you can just choose. Now, I would like to take a poll. Which one of the two you feel like that it is comfortable? Ramakrishnan?
Sir, option 1 is comfortable for me.
Option 1 is comfortable for Ramakrishnan. But it is a little lengthier. You got to do all these functions. Correct?
Yes, but I'm okay with it. I have 100% clarity on that, so I don't want to take chances.
Is that okay? All of you? Venkatraj, have you copied?
Sir, I feel
Huh?
sir, option 1 is only better, sir, for me also.
Have you
Because
copied? Is that over?
yes, sir. Sir, option 1, can you scroll up, sir, once again?
Is that over? You can pick it up from, you can take a screenshot and then do it, because we
Okay,
can't
sir.
be just waiting for too much of a
Okay,
time.
sir.
Now, which one of the two is better is what I've asked. You people are just telling it is, sir, the first one is giving me much better clarity. Second one is not giving that much of clarity. Chances of going wrong is very much there. So if you ask me a question as which one you need to do and at what circumstances you do, let me just suggest to you that you prefer this one. This is the first rank. This is the second rank that you do. I will tell you the reason, logic, etc. If it is acceptable, you'll take it up, otherwise you leave it. What net present value will the project yield if worst outcome is realized? What is the probability of occurrence of this NPV? For this question, the first one is the only method that you got to follow. Which one is giving you the worst NPV? Worst NPV, I have already done. The worst NPV had just come in the first case. The first combination, that NPV is 7356 negative. 7356 is the worst negative. So the net present value, if worst outcome is realized, is 7356. What is the probability of that occurrence? What is the probability of that occurrence, which is 8%? 8%. If I try this under this method, I will not be in a position to get that number. Okay. So there is always a background behind us why we are going to choose first method, second method, and all that. Right. Next one, next question. Have you understood what exactly is the reason behind that I've just given two different alternatives? Why you got to do the first way, why you have got to do in the second way? So now, what will be the best and the probability of that occurrence? What is the best one? The best one comes from the last combination, combination C. Combination C is the best one. How much you get? 12,065. What is the probability of that, which is going to be 6%? It is going to be 6%, which I will not be in a position to do it through this method. So therefore, depending upon what sort of question that they are asking, you got to change your stand and accordingly you got to hit. Okay. Will the project be accepted? Supposing the question were to be only one, that being D. So I would suggest you to try the second one. So 3125 is the answer. No. So you have selected invest. Invest because it gives you positive NPV. That's it. So if you are a little careful in just handling this 0.9091 two times, and one when you are traveling it from year 2 to year number 1, you got to be very careful. There you cannot be multiplying it by 0.8264. You have got to do it two times. No? So you got to do that. That is the only extra fitting that you need to have in your mind. And the rest of the computation, just like with your calculator, you can do it. So here, how many times I will be multiplying with PV factor? So this is too much of a time consuming that you would be having, though you feel that better clarity you just get. But at the cost of time, you should not be wasting that. So it is better that you are cautious and save time for some better questions. Okay. So choice is yours. You please just try. Is that okay?
Okay, sir.
I am leaving the choice to you. I just don't force. Now, question number 18. Huh? Illustration 12. See, now, illustration 12. Illustration 12 is not decision tree. I think so. Anyway, I will just take it up. Illustration number 12. Venkatraj will read out this problem.
Alright, sir. A company named Robi Cubes decided to replace the existing computer system of their organization. Original cost of old system was 25,000 and it was installed 5 years ago. Current market value of old system is 5,000. Depreciation of the old system was charged with life of 10 years with estimated salvage value as nil. Depreciation of the new system will be charged with life over 5 years. Present cost of new system is 50,000. Estimated salvage value of new system is 1,000. Estimated cost savings with the new system is 5,000 per year. Increase in sales with the new system is assumed at 10% per year based on original total sales of 10 lakhs. 10 company follows straight line method of depreciation. Cost of capital is 10%, whereas tax rate is 30%.
See, is it total sales of 10 lakhs or only 1 lakh? Ajay ko bola? But anyway, I will just check up with that a little later. I will let us just focus on to the question. So you have the original cost of the old system, which they bought 5 years back for 25,000. The current market value is 5,000 for that 5-year-old machine. The depreciation that they wanted to charge is 10 years with no salvage value. So since tax rate is there, depreciation is a very important component. Depreciation of the old system is to be taken up at the rate of 2,500 per annum. Depreciation, the new system is to be charged for the remaining 5 years, and the present cost is 50,000, and they estimate the salvage value of the new one is 1,000. So this will result in 49,000 to be knocked off in 5 years period. And the cost saving in the new system is likely to give them 5,000 rupees hedge. An increase in the sales with a new system is assumed to be 10% per year based on the original total sales of, hmm, I think it should be 100,000. That is a lakh of rupees. Let me just check up. Yes, this is 100,000 only. This is not 10 lakhs, it is 1 lakh. Company follows straight line method, cost of depreciation, whereas tax rate is 30%. So now, old and the new. Cost being 25,000 and it is 50,000. Salvage value nil and 1,000. Depreciable amount is 25,000 and 49,000. Years estimated 10 years and 5 years. Depreciation per annum 2,500. And how much is that? 49,000 divided by 5 is going to be 9,800. And salvage value present. Present salvage value for the old one is 5,000. Okay. And cost, when it is X, it is going to be X minus 5,000. When it is revenue, sales, if it were to be Y, it will be Y plus 10%, 0.1 Y. So this is not Y, it is 100. It is going to be 110,000. Correct. See, this is the way you got to look at it. So incremental sales 10,000. Cost savings. Cost savings, how much is that? 5,000. Increase in profit before depreciation 15,000. Because both are plus only, no? Increase in sales 10,000. Cost saving is also 5,000. Increase in profit before depreciation is 15,000. So incremental depreciation, how much is that? 7,300. Correct? 7,300. And one more information, carrying amount of this being 5 years gone, it is 12,500. How come? 25,000 minus 2,500 into 5. Correct? That I have not captured. Here it is not applicable. Incremental depreciation, so is 7,300. Incremental profit before taxation, how much is that? 7,700. So incremental profit after taxation, which is 70%. So 70% of 7, 5390. Incremental cash inflow is incremental PAT plus depreciation. So how much is that? 12,690. Is that right? So annuity factor at the rate of 10% for 5 years. 3 point something you will be getting. Please just check up. Hmm? 3.7908. Discounted cash inflow. So 3.7908 into 12,690, which is equal to, this is discounted cash inflow number 148,105. Am I right? Discounted cash inflow number 2 is going to be salvage value at Wi-Fi. So how much is that? 1,000 into 0.6209. 621. Is that right? Then discounted cash inflow number 3, tax savings on existing machine. How come? 12,500 is the book value. Salvage value of that is 5,000. There is a loss to the extent of 7,500 on which it is going to be 0.3 into 1 because it is going to be the present one. Today it is happening. Correct. 7,500 into 0.3 into 1. This is PV factor that is by year 0. 2250. So total discounted cash inflow 48,105 plus 621. How much is that? 50,976. Discounted cash outflow is 50,000 minus the salvage value of the other one minus 5,000, which is going to be 45,000, which results in an NPV of 5976. What is the answer? That's it. If you have things in your mind, no, just like that you can solve. You have seen Carom King, no, that's the way you can do it. Come on, kindly just make note. Oh, this is easy. Why should I just look into somebody else's? So here you just find Hayagriver is coming and telling you everything. You just do it. Why I should do just try somebody else's way? That is why I'm telling you. Look at my answer. That is better than ICI's answers. Not with heavy head, I'm telling, with humbleness only, I'm telling. Just right in front of you, I'm just solving. This is not the way institute had just developed it. I'm not just finding fault with them. Please just make note. Mark it out as double important, triple important. Are you clear? Are you clear? If you have made note, please let me know. We'll proceed to book back. Hmm? So now let us just go to book back. Sorry. See, this is a problem which is very difficult to get in modern day textbooks. But market order is very important. Question number 18, please. This is a problem involving real options. Real options and decision tree both put together, you are just getting it. Market order is very important. It is question number 18. Come on. Yes. Rajagopalan, could you read out? You can just read from here. That is why I told you. Don't take chances. Yes. Come on, read Rajagopalan.
PC Corporation is ordering a special purpose piece of machinery costing rupees 9,000 with a life of 2 years, after which there is no expected salvage value. The possible incremental net cash flow or year one cash flow probability, year two cash flow conditional probability. The company's required rate of return for this investment is 8%. Calculate the mean of the probability distribution of possible net present values. Suppose now that the possibility of abandonment exists and that the abandonment value of the project at the end of year one is rupees 4,500. Calculate the new mean NPV, assuming the company abandons the project if it is worthwhile to do so. Compare your calculations with those in part A. What are the implications?
See, here is a problem where there is no indication whatsoever that it is a decision tree problem. But I can tell for sure that it is decision tree problem. How? Is this because it is there in my workbook? No. The way in which it is communicated, that will be an indication that it is a problem on decision tree problem. How do we I know that? Or you people can know that. In year number one, if it were to be 6,000, in year number two, you see that it is 2,000, 3,000, 4,000, or it is 0.3, 0.5, 0.2. So, in a way, then when you identify this, so these are the items that you say, even under question that is in the question paper, they may not be having the botheration to tell that this is one particular set. That is what you got to apply your mind and then work. Next one. So you got to take up this and this. Okay. Are you understanding that you can fix them into that part? Then I told you that easier version is only the second version. Easier is only the second version. Say, don't jump into any sort of conclusion until I complete. Just watch it, and any query that you have, you please just raise only after my completion of the solution. So in between, I will not be entertaining any of your questions. Okay. So please just follow me. And in case you find any computational error, there you can raise the voice. So there are two questions that you have. Question number 18. There are two questions that you have. What are the two questions that you have? One is that you walk through all 2 years. So you just walk through all 2 years. No decision you take in between. Here you have what? Abandonment option you have. That means stop at year number 1 and start to year 2 only when it is favorable, or else abandon at year number 1 itself. Is that clear? So you walk through all 2 years, come what may, just run for 2 years. Here you stop at year number 1. Only when you are comfortable, you run to year number 2, or else you take year number 1. This is what you have as what? Abandonment option. So here there is no abandonment option that you have. Here you do not have abandonment option. In the second case, you have abandonment option. Are you clear? Are you clear?
Yes, yes.
Rajagopala? Now I am going to run through. Invest, do not invest. Year number 1, what are the numbers that I have? So here I have 3. I will prove the second one is easier for you. 2, 3, 4. 2, 3, 4. 4, 5, 6, 6, 7, 8. Here it is 6, 7, 8. 0.3, 0.4, 0.3. Here it is 0.3, 0.5, 0.2. Then 0.3, 0.4, 0.3. Then 0.2, 0.5, and 0.3. Correct? And the cost of capital is only 8%. 1 divided by 1.08. So year number 1, it is 0.9259. For year number 2, it is 0.8573. Correct? Now, what I would like to do, just closely follow and watch. Here I will run it through this way. How do I do that? 2000 into 0.3, 3000 into 0.5, 4000 into 0.2, all that 2900 into 0.9259. Here I will make it out as 2685. How did I get? 2000 into 0.3, 3000 into 0.5, 4000 into 0.2 multiplied by 0.9259 only. Here I got to be very careful. Next. 4,000 into 0.3. Then 5,000 into 0.4. 6,000 into 0.3. 5,000 into 0.9259. 4630. Please confirm, all of you. Please confirm. Just do not just enter into copying work. Let me tell you, I will put it in YouTube. You can just take a screenshot and then work. What is very important is not the number that you copy in your notebook very fast. Just watch what I'm telling. The second one is what you got to select is I'm going to prove. 6,000 into 0.2, 7,000 into 0.5, 8,000 into 0.3, all that together comes to 7,100. 7,100 into 0.9259, that you get 6,574. Correct? All of you, please just confirm that it is correct. Venkatraj, Ramakrishnan, Shivagami Sundari, Venkat, Rajagopalan, all of you, please just confirm that these numbers are correct. So I am wanting you people to communicate clearly as whether these items are all correct. Shall we proceed?
Yes, sir. I'm getting the values.
Right. Now, what is it I will be getting it out here? Here is a place where you have to be a little more careful. So here I will keep that working for that. 6,000 plus 2685 multiplied by 0.3 plus 0.3. Then 7,000 plus 4,630 into 0.4 plus 8,000 plus 6,574 into 0.3. The entire summation should be multiplied by 0.9259 once again. Take your calculator and patiently work out, and without any mistake, please just work it out. $10,768, correct? Please confirm this.
Yes, sir. Correct.
Investment will cost you how much? 9,000. This is not going to result anywhere, and this result is going to be 1768. 1768. Our answer is correct. So what sort of answer that we will be providing? Calculate the mean of the probability distribution of possible net present value. Mean of the probability of that net present value. That means what they're asking is only NPV. NPV is 1768. 1768 in this way of Excel sheet, when you do, how many combinations that you will be having? 9 combination you will be having. Am I right? How 9 combination I will be getting? First year 3, year number 1, year number 2. Year number 1, how many combination? I will get 6,000 for first 3 combination, 7,000 for the next 8,000 for the next. Here, what is the number that I will be getting? 234. 2,000. No, please just understand what I'm doing. Oh, is it? Ah, then no problem. No problem. The last one, let me just check up. 678. Right. See, now I've just got these number 0.9259 and 0.8573. 0.8573. Now, how do I arrive at as NPV? Just tell some product where this is going to be common, constant, comma, this minus 9,000, comma, 0, round. Sorry, here round. So 1730, likewise, I will get this probability 1, probability 2, join probability and expected NPV. Same thing. So 0.3, 0.4, what is the probability here? 0.3, 0.5, 0.2. 0.3, 0.4, 0.3. 0.2, 0.5, 0.3. Join probability round 1767. Have you got it? 1768, 1767. So why I am asking you to do this is that remember this is through computer I can do under examination condition. It is difficult. It is time consuming. So many computation that you are engaged, no. Greater chance of committing error is there. That is the reason as why I am saying that please just do not take up the first one. You adapt yourself to the second one because it is less time consuming. That is point number one. Point number two, I'm going to tell you the advantage of doing the second way of working. Please just follow me for the second part of the question. Second part of the question, where you have abandonment possibility. Abandonment possibility. Now I got to draw a decision tree for that purpose exclusively. What is that? So where I will say invest and do not invest. I will run through 1, 2, and 3, 6, 7, and 8. There I have one decision making area I have. I will tell you how. There I got to think whether to continue or abandon. There is a point of thinking I am just giving. Continue or abandon. Continue or what you have as abandon. abandon. So if I continue there, then I will have 1, 2, 3. If I have 1, 2, that is, I will have this 1, 2, and 3. Am I right? Say yes or no. So this is going to be 2, 3, 4, 4, 5, 6, 6, 7, 8. Correct. These numbers I have already done. What is that? 2, 6, 8, 5. I have already done this. Correct. If I have abandonment option, 4,500 is what I have. Correct. If I sell at the end of the second, that is at the end of the first year, before I want to take up for the second year, I have the option of either continuing or abandoning. So here, how much is that you end up with? 4,630 or 4,500. Here, what is the number that you end up with? 6,574 or 4,500. Now I got to take decision. How is that I will take decision? So here between 2,685 and 4,500, which one is better? 4,500 is better. Between 4,630 and 4,500, which one is better? 4,630 is better. Between 6,574 and 4,500, which one is better? 6,574. See, when you try in the first way of working, you will lose sight. You will not be in a position to implement abandonment or continue option. Are you understanding? Please understand this 2,685 is by year number 1. This is also by year number 1. Comparison becomes fairer. You were just asking at that point of time, sir, I'm just not understanding why you are using this 0.9091 two times. Why I'm using it 2 times? It's not 2 times I'm using. From year number 2 to year number 1, I got to use only once. When I bring it from year number 1 to year number 0, I will be using it. Have that in your mind. Now the matter becomes the same way. What is that we should do here? So it is 6,000 plus 4,500 multiplied by 0.3 plus 7,000 plus 4,630 into 0.4 plus 8,000 plus 6,574 into 0.3, the whole multiplied by 0.9259. Correct. Please use calculator and get me the numbers, please, all of you. Don't engage in very fast copying and all that. Please just do that. 6,000 plus 4,500 into 0.3 memory plus 7,000 plus 4,630 into 0.4 memory plus 8,000 plus 6,574 into 0.3 memory plus recall memory into 0.9259. So it is 11,272. 11,272. Please just check it up. Ramakrishnan, Venkatraj, Rajagopal, and Sivagama Sundari, please just convey how much is the number that you are ending up with. Is it 11,272? There is only one change that we have made. So this is the only item that underwent a change. The rest of which remaining the same. If this is going to give you 10,768, how much is this? Would just get that number. 11,272, 9,000 and nil. Which one is better? It is 2272 is better. 2272 is better. Now you read the question. Suppose that the possibility of abandonment exists, that the abandonment value of the project at the end of year number 1 is 4,500. Calculate the new mean NPV, assuming the company abandons the project. If it is worthwhile to do so, compare your calculation with those in party. What are the implications? What are the implications? When abandonment option is existing, I should continue the project. If I get 7,000 and 8,000 in year number 1 and abandon if I get 6,000 in year number 1. So therefore, how is that answer that I will be providing? So continue. If year 1 cash inflow were to be 7,000 or 8,000 or else abandon. This is the way you got to write. Continue if year number 1 cash inflow were to be 7,000 or 8,000 or else means 6,000 or else or else or else that is 6,000 abandon. Is that clear? Say yes or no. Are you following? Now tell me as which of the two methods you should like. It is not your liking. I'm imposing now. The first method or the second method. I have already indicated that this is what you got to like. So I am just telling you the logic. That's why you should like. Though it might sound that it is very simple, logical and all that. But how many times you just multiply all this? More computation means more chance of going wrong is there. So that much of computation we can avoid. So where you summarize that and multiply only once. Do this, summarize and multiply only once. And this is what you have to select. So in a way, I am using my veto power and I'm imposing on you. You please like the second approach only. That is going to help you in majority of the cases. The first one is going to help you only when you have such a question as what is the best and the worst possibility. Understood? Yes, Venkatraj, Ramakrishnan, Shivagami Sundari, Venkat, and Rajagopalan. Come on. Are you
Sir,
clear?
able to understand, sir, why we should choose the second, because calculation is simple. We can do it more fast.
Understood. Understood.
So when there is an abandonment option, you got to do like that. So now you can really feel that why somebody is telling you, please just choose this. It's not that I wanted all of you to fall in line with whatever I'm saying. I do not have that egoistic problem. I'm not egoistic person. So it is what is the best thing that you need to have under examination condition. Go prepared for that. So the child will cry that it wants something. The mother will tell, don't do this. Take this. It may not be that tastier, but it is good for the child. That is what I'm just doing. So at this moment, I just don't want to try anything more. So at this moment, I close this class because this particular thing should sink in your mind and let it go like that. Is that okay? So we will just meet on some other occasion if it were to be before the next Sunday. And let me tell you, next Sunday also we will concentrate on this and finish off all that book back from institute study material. FR maybe we will allocate some other time the next Sunday. Thank you.